Today I'm going to show you why Bitcoin could bottom in exactly 30 days time. But first and foremost, let's get into a little bit of the price action and a couple of other things. And then I'll show you the data that I found and what I'm looking at, as well as a couple of short-term trade opportunities which are lining up. One is already in profit, and I'll touch base on that too. So without further ado, let's get straight into it. Looking at this chart over here, this is, of course, Bitcoin just above the key level. I did warn of this. It has started to pull back slightly, and now Bitcoin needs to bounce sooner rather than later if bulls want to hold on to their hope of this run. In other news, the bird is free. Elon Musk has officially acquired Twitter, and so far, I mean, it's looking a little bit better. There is still a lot of bots on my account, at least when I made a post this morning, but we'll see how that fares out. Yesterday, we had the earnings reports with the big tech companies, and you can see Sven here says that Microsoft -8, Google -9, Meta -20, Amazon -20%. I think Apple was the only one that beat earnings results, and he says here in brackets, the economy is strong and resilient. In other words, being very, very sarcastic about that. It doesn't look good. It doesn't look good when you look at that. And Clark mentions over here, you are seeing massive companies moving like penny stocks, pre-decimalization. And he says it says a lot about the liquidity in the markets right now, meaning that there isn't much liquidity, right? So this is what I've told you guys, how the big players work. For them, it's a game of liquidity. They're always looking to find the liquidity because unlike you as a retail trader, you can get your orders filled whether you're wanting to buy or sell pretty much anywhere within the market. But when you're looking at big players, this is why prices tend to fluctuate towards areas where strong liquidity lies, which is one of the reasons that I was outlining that potential move to anywhere between about $21,000 and $22,000. And we'll look closely at the charts today as well to see if it is possible for a little bit further upside first before the next down leg. You have with the acquisition of Twitter, CZ of Binance kind of taking over here, and he contributed $500 million, which is a massive amount. So very, very interesting in swing of things with the way that Web3 is kind of trying to take over here. And I think it's a great initiative with free speech. Michael Saylor of MicroStrategy shows here MicroStrategy versus the big tech earnings since they have adopted Bitcoin standard. And this is essentially what Bitcoin was designed for. I mean, he's setting up still 121% despite having brought his Bitcoin at all-time highs. And that's the reason of why you need to dollar cost average, because that is essentially what he does. He is a dollar cost averager. That's the way that they enter their funds into the market. And yet he's still up in comparison to Meta, Netflix, and Amazon. So very, very interesting to look at that. And Jesse Olsen over here, he says, if this is still a melt-up, then the FANG stocks didn't receive the memo. And here he's got the FANG stocks, all of their charts over here, and it looks absolutely atrocious when you look at that. This also provides a massive opportunity, though, if I must be honest with you. It's probably not time to be shorting the market majorly with massive swing shorts looking for meltdowns in crypto and stocks, although I do think that we still make new lows in crypto at least. At the end of the day, I think it's definitely time to start positioning yourself and your psychology towards looking to capitalize on the longer term growth of these different asset classes and the opportunity that you can capitalize on when prices are this low. I see with Facebook or Meta, pretty much if you got in now, it's the same price as what it was 7 years ago. 7 years worth of gains completely wiped out. Can you imagine you were somebody that bought a lump sum 7 years ago with a promising looking platform, and look at what it's sitting at now? This is why the trend is your friend until the end of the trend, and you really, really do need to focus on that. So there you have it, 7 years completely gone and wiped out. So today there is one or two things that are important. You have the GDP data month on month that's coming out on the Forex calendar, and you have the core PCE price index month on month also coming out. The one is for Canada, the other one is for the US. The US one is probably going to be more relevant and important in terms of moving the US stock markets, and that is coming out at 8:30 a.m. That's EST time. So keep an eye out on that when the markets open later on today in a couple of hours' time. I wanted to touch quickly on the overall market cap. Let's have a look to see if it can bounce from this level. We outlined yesterday that you have a broader range, and you have now officially made a higher high. Now the question is, when it comes back down over here, is it going to catch support again and bounce? So we'll be keeping an eye on that. Then the weekly volatility indicator over here is definitely, to me, one of the most important things that I'm still looking at, and I'll wait for proper signal of expansion. I want to see something similar to this side over here. And in just a moment's time, I'm going to get into why Bitcoin may have not actually seen the bottom yet. And if it has seen the bottom, what you can do about that. So let's look at this chart, which is something I haven't brought up for quite some time. If you look at the candles over here on your trading view, you'll probably have to have a premium version to make use of this. And I'll kind of use what I'm about to show you in conjunction with these types of charts. It's called the line break chart, same as what you get with a Heikinashi, where it kind of works out the averages. But as you can see, it's been historically pretty accurate. In the sense that anytime that you start to get green prints, there's very few false signals. Yes, you had one over here, but generally speaking, there's very few false signals. If this week starts to print green over here, it may be a sign that the bottom is indeed in. But so far, it hasn't done that yet, and this is why risk does remain to the downside. So getting into the actual part of the show, from Nakamoto, he says here, if you expect the cycle to be like the last one and the one before it, we are on a clock now. One final dump within the next 30 days. If that doesn't happen, then you probably need to delete the red button until 2025, because from a timing cycle perspective, 2025 would be the next cycle top. Remember, you always add 4 years. So you had 2017 plus 4 years. It was November 2021 that we topped. Now you'd be looking at around the final quarter of 2025. And here he shows that you have 541 bars over there. So let's move on to the next tweet that he has over here, which essentially says that the drawdown on the total is exactly the same as it was before the final drop in 2018. So keyword, before the final drop in 2018, with exactly the same time to the halving, which is 548 days. So it's spooky how similar these timing cycles do work out. And he says, now, I'm not saying this is going to dump, but if 40 days from now we're at $13,000, it wouldn't exactly be a surprise. And I tend to agree. Look, there's no certainties in trading. It's only a game of probabilities and finding the trend. And so far, the trend is still down. I mean, Bitcoin needs to break and hold above 23K, and then the high time frames begin to change. So therefore, I would still be targeting lower prices from a probability perspective. And that main area of confluence lies between $10,000 and $14,000 if you want to give it a broader-ish kind of range, accounting for people that might try front run the 10K region. Maybe they're going to place their bids a little bit higher and we bounce at 14K. But horizontal support levels, that is where the primary support lies. And he says here, and well, look, I'm not saying it's definitely going to do this again, but it definitely is a pattern. We are minus 70%. 549 days before the halving. And that is exactly what happened over here. So if you can see my cursor on the screen, this is essentially where we're at. If you look at the timing cycle, you're 70% down with 540 odd days before the halving. And this is usually what happens. You have a capitulation event. So you need to keep your eyes peeled because anything could happen at any moment. And I wanted to bring this up over here for the bullish case. And it's this trader over here, Trader Allen. He says the DEXY broadening sideways after parabolic move leads to major bull runs in Bitcoin. Recent price action in BTC and DEXY show the early signs of repeating of this pattern. So going back onto this tweet, if we don't bottom within the next 30 days, then maybe the bottom is in fact in. If the DEXY does break down in conjunction with that as well, then there's a possibility that Bitcoin does start to slowly but surely initiate its next bull run. And one thing that I found very interesting is yesterday we did have this diagonal support, which is finally broken down on the 10-year yield. Typically, this would be good for risk on assets, and it might give a chance for markets to run. But there are some contrarian indicators over here, there's a couple of differences when you look at certain things. For the DXY, I would say that it still hasn't totally broken down. I expected a bounce from somewhere around the circle area, and you can see that it has bounced. What I'd be looking for in order to agree with what this trader is saying over here is for a proper breakdown. We need to see something like this, and I'm going to draw it in. If you see it come up over here, make its next lower high, and then we break that down, then you can say now there's probably a big macro shift. Let's quickly change the color over there. Now there's probably a big macro shift within Bitcoin. So these are things to keep an eye on. Very, very important. S&P 500. There is still a lot of liquidity that lies up here. I'm not ruling out the possibility of this to still rally into these regions, and this would be a primary area that I'd be looking to short sell into. I'm taking very short-term shorts at the moment. So more like just scalp day trading kind of things, which I dropped the Matic short trade yesterday, which I made 20% profit off of. It depends on how much leverage you use. I used 5x leverage on that one. So I've already closed that position. And the reason why is because I'm still skeptical that things could bounce with stocks having sold off so heavily with the earnings reports out of the way. The panic is over. Potentially people have sold into that, and now potentially it could bounce, and then I would be targeting this liquidity. So remember what I just said, these markets are a game of liquidity. Do you see the strong sell-off candle over here? This is where there will definitely be some liquidity. So I will continue to keep an eye on that area. I don't rule out the possibility of a little bit of a pump, which would give Bitcoin one more push to the upside. So you would want to see Bitcoin bounce pretty much right now. You don't want to see Bitcoin, if you're a bull at least, you don't want to see Bitcoin hang around here any longer, because as I outlined on yesterday's show, if you take all the times that we broke through the super guppy indicator on a daily, which is all these different exponential moving averages, we only managed to close the most that we closed in the entire bear cycle was, I think, on this side over here, we managed to hold 3 days above the chart, above the super guppy indicator, and then proceeded to fall through that region over there. And it looks similar over here. You don't want to see a tower top scenario. Otherwise, that means that the massive bull trap is confirmed. I tend to think that they'll capture a little bit more liquidity from this side over here, which means one more push to anywhere between about 21,500 and potentially even as high as $22,000. So if you see that, do not be surprised and don't FOMO in. I'll still say exactly the same thing, which is wait for confirmation to get in. Confirmation would be holding for a couple of days above here and slow and steady climbs up, and then you'll find the next major higher low, which would be somewhere around here, almost the same price as what we at now, and then you can get a safe entry knowing that these bands are starting to turn green. There is a massive cluster of resistance between here and about 23,500. Bitcoin bulls have a lot of work to do to get through those levels, so there is no need to FOMO, which is why we'll keep you entertained with short-term trades, which I'm going to show you in just a second's time. Looking at this chart over here, primary resistance area, this was where I outlined also the liquidity. We tapped directly into that, rejected. So I had drawn this yesterday. I promise you I haven't changed it. You can go look at the video from yesterday. And I outlined this as a primary zone, 20,500 that bulls needed to hold above, which lines up as well with the Bollinger Bands. That was the top of the Bollinger Band. The bulls needed to hold that if they wanted to get this run going. And as you can see, they closed below. So now the question is, are we going to rally today, or are we going to pull all the way back? And I can't really answer that question right now, because that depends entirely on what the stock market does. So we need to wait to see when the markets open, how the stock market reacts. Pre-market, you can go and have a look if it's opening up or down. And that should give you a little bit of an indication of what to expect next. But I don't think that it's unreasonable to expect a pullback over the next couple of days. Now, in the short term, this was the trade that I gave. You can see on a 4-hour chart, momentum oscillators and stochastics are starting to look like they're bottoming out and they're about to cross over. You do also have on a 4-hour chart a series of higher lows. Yes, it broke down the main trend line, but this was just for my short position. I'll show you the thinking behind that on the 15-minute chart. So let's take a look at this. So in the early hours of the morning, I did post on the Discord group that I would close the short trade on a break of that trend line, and they had made a high. So I'm out of this position. Now more be looking for longs today for potential short-term bounces. And if you are wondering what that looks like, let me just quickly get this over here. There you go. Here's the Discord. So I gave the trade over there, and I said if you want, you can wait for a break of the red trend line before entering. I entered right over there. I didn't have any drawdown on this trade, and then it proceeded to break through. And then I said over here, morning, I will TP on the break of the trend line and then reload again. And I updated them. I said that the shorts are closed. Now, if you want to be in this Discord, it is entirely free. The only thing that is required of you is that you use one of the Banter links. You can use any one of my links in the description below over here, OKX, BitGet, or BYBIT link. And then basically you can just make a small deposit to that exchange, and then you can follow along with those trades. So what about Bitcoin? Let's quickly go onto a 4-hour chart and take a look at Bitcoin, because Bitcoin, of course, is going to drive the overall market. So yesterday, I also updated this. I put this on Twitter, and I said this is kind of what I'm looking for. As you can see, the little hammer, I'm looking for one more tap of this liquidity somewhere within this zone. I want to see a little bit higher, about 21.5 to potentially even about almost 22,000. This is the golden zone for me that I want to see tap. And price needs to move soon. Can it move soon? Well, these momentum oscillators do look like they could turn at any moment. Let's take a look at the 1 hour. 1 hour started to cross up, crossing back down again. 2 hour. 2 hour has tapped the bottom twice. And then the 4 hour, it's going to be entirely dependent on the stock market. So I've closed my short positions. I am looking to reload on those as well. I'm just going to have to take it as it comes. A little bit difficult to read the market at the moment. Really, anything can happen. It can go up and down. I'm sorry to give you to just say up or down, but I will drop it in the Discord. Long term or midterm, I definitely lead towards lower prices. Short term, I think that the bulls are starting to run out of steam. This is my max zone. So your upside is limited. Your upside is from here to here. Let's grab a ruler. Your upside is limited to about 7.6%. So you have to consider, is it worth aping into anything at the moment? Unless you leverage trading on a short time frame, I don't really think so. And guys, I think that brings us to the end. One more thing I'll mention is you do have the EMA crossover here between the 50 and the 200 EMA. And I told you as well on yesterday's show, don't FOMO in. Usually you see a big move up and then it pulls back into that like a magnet. That gives you the opportunity to go long, backing all the higher lows. So if you have a look over there and you just draw a trend line, you got your high lows. That would be your next zone to bid if you do want to get into the market. So that brings us to the end. Very quick show. Do me a massive favor. Give this video a like if you do enjoy the short form content. And then also head over onto the Discord. A big shout out as well to the sponsor of the day is PrimeXBT. If you do want to sign up over there, they're giving up to $7,000 in sign up bonuses, but only if you use the promo code below, which is Kyledoops. And that's it from me, folks. I will see you all on the next video. Trade safely. When the market gives more clear direction, I'll be able to update you all on Twitter. Have an absolutely stellar day, and I appreciate you all. Cheers for now.